Hey everybody, welcome back to NewJerseyRealEstateGuys.com, Northern New Jersey's #1 source for buyers and sellers. First things first, we want to thank all of our readers for visiting day in and day out. We've quickly become one of New Jersey's top real estate blogs on the internet, and as most people know, the statistic is 86% of home buyers start their search for homes online. So it's important for us to know that all of our audience is getting what they want. So in the comment section at the bottom of every page, constructive criticism, positive or negative comments, please apply them to our website, because we certainly look to make our website bigger and better in the next coming years, and we can only do that with your feedback. So we appreciate it again, and we do take great pride in it, so I hope you guys appreciate it as much as we appreciate giving it out. A couple important things to note. Hoboken Real Estate. This is our Hoboken Condo report for February of 2011. We're going to go over some end-of-the-year stats. We're going to go over January numbers. The available inventory of condos out there is in the mid-threes. I think we're at 350 or 360 something available units on the market, and our sales volume is also down. So as both come down, it's kind of a wash. The rate of absorption remains consistent with what it was in the past during the fourth quarter of 2010. We're at about a 9-month rate of absorption. We'd like to see that get closer to 6 months, but sales volume definitely needs to pick up the pace a little bit. New York Metro condos was the only area in the United States of America that saw its condo market increase year over year and month over month, and that's based on the Case-Shiller report. And we're going to see that in the next page here. But international money is becoming, international investors are coming in droves, buying in the Gold Coast of New Jersey. We're seeing a lot of developer-owned units being bought by international groups. We've personally spoken to groups out of Singapore, Australia, Germany, Israel, and they're all looking to buy over in this area. And it looks like they're looking to sacrifice a little bit more on their capitalization rate these days. They're basing their investments on longer-term speculation. So a lot of the investors want proximity to New York City, bus stops, and so forth and so on. And some of them are definitely looking in the amenity buildings to buy those leftover developer units. So that's exciting to see. If you're a follower of trends, when the international investor dollars come in this heavily in a certain market, usually it starts the upward trend of a recovery. So, hopefully that's a positive factor in going forward in this market, and we'll just see. But we're seeing and hearing from a lot of pent-up demand buyers that are looking to either renew their lease this year or buy something. They want to take advantage of low rates. But as a renter, the landlord concessions are getting fewer and fewer. So, and that's a result of the rental demand at the moment. Prices on rental units are going up. As we saw in Hoboken, they actually did go up this year quite a bit. And again, the concessions that landlords are given are fewer than what they were in the past. But without further ado, let's get to this slideshow and get into the nuts and bolts of what's going on in the Hoboken real estate market. And again, if you guys have any questions or want any positive feedback or can give any positive feedback, please feel free to do so, and we'll see you on the next page. Some local real estate tidbits that we're seeing nationally and locally. Nationally, mortgage rates are up slightly. This year's 30-year fix is up to 4.84 from 4.8 a week earlier. So mortgage rates are consistently increasing a little bit week in and week out. So that's what's getting a lot of this pent-up buyers and demand that are actually looking in the market to say, oh, geez, I better buy before rates get too high. As you know, going from a 4.8 to a 4.84 doesn't really have that much of an effect on your debt service, so it's not anything to panic about. It's just an indication that rates are increasing and fluctuating with the market. Vacancy rates are getting lower each month, especially in Hoboken. Rental rates are getting pushed upward. As I mentioned in the previous page, the landlord concessions are almost a thing of the past. We are seeing some concessions out there in the market, but certainly not anything as strong as what we used to see back a few days ago or a few months ago. New York Metro condo prices are up 2.5% year over year, and we're going to get to that chart in a little bit, I think, on the next page. And the overall price per square foot on sales is down 3.4% from the fourth quarter of 2008 to the fourth quarter of 2010. So overall, the price per square foot on Hoboken condos dropped in the last 2 years by 3.4%, and you can see that on a chart in the following coming pages. Let's look at some statistics from the most recent S&P Case-Shiller report. As you can see, we do a month-over-month, year-over-year, 5 years, last 10 years for U.S. houses, New York Metro homes, and also New York Metro condos. And as you'll see, the New York Metro condos over the last 5 years and 10 years has shown that increase that everybody did if you bought 10 years out. Those that bought 5 years out, mostly everybody's looking at a negative equity position from 5 years to today. But look at the year-over-year and month-over-month statistics. As most markets are continuing to show a little bit of a drop, the New York Metro condos are showing a little bit of an improvement. The month-over-month, almost a half a point up month-over-month. Over the last year, we're showing an improvement of about 2.5% on average on real estate prices of condos in the New York metro area. So that's a promising sign and indication that we could be onto something here, and hopefully with the springtime buyers and the people that look to buy when the weather gets a little bit warmer, I think we're going to see these numbers improve quite a bit more in the next S&P's Case-Shiller report. All right, Hoboken Dabos. Most of you know that the Dabos mean that those are units placed under contract. And taking a look at this chart here, we have 2009 indicated by the blue line, and the red indicates 2010. January of 2011, we had 38 condos go under contract in Hoboken, and it's actually showing a little bit more of a decline. So as you can see, at the beginning of the year, we had a spike in homes placed under contract because of the first-time homebuyer tax credit, obviously. That kind of had the halo effect going, and as we came out of that first-time homebuyer tax credit, condos placed under contract declined, and we started seeing the normal pattern of the decline in homes placed under contract during the winter months. So hopefully by springtime, that pent-up demand is going to start buying. We're going to start seeing some buyers out there that are going to help improve this chart, and I think we're going to start seeing some positive trends in 2011, starting probably in the March and April months of 2011. Let's take a look at sales volume. Hey, look, in 2009, we averaged 54 condo sales a month. In 2010, we averaged 10% more, and we averaged 60 sales a month. Maybe that number is a little bit skewed because of June's expiration of the first-time homebuyer tax credit. We had 124 sales, as you can see, that big spike in June. And then we came back down to reality and started seeing more of the average. And we did drop off compared to 2009 in comparison to monthly sales. But with the pent-up demand that we keep talking about, I think that you're going to see this number improve. And I think you're going to start seeing a little bit of an upward adjustment in the charts that we are going to report in, because there obviously, as mortgage rates threaten to go higher and people look at inflation and so forth and so on, we're going to start seeing some buyers come out purchasing units. And again, with the international investors, we definitely see a little bit of an assistance from them, where we're going to start seeing some stronger sales volume in the next coming few months. And for those of you that follow the median home price, sales price that is, we did drop in 2010 in comparison to 2009. Just an overall average figure for you. In 2009, the average median sales price of a condo in Hoboken was $471,250. In 2010, we dropped to $458,748, which is a drop in about 2.7% in your median. But we kind of bounced all over the map, and that's just how it goes when you're looking at a median sales price, but gives you a good indication on what to look for. Okay, a lot of people feel that the price per square foot indicates a good gauge of the market. So as we're looking at this chart, we go all the way back to the fourth quarter of 2008. Notice the one bedrooms, which is indicated by the red line. Since the second quarter of 2009, we've been pretty darn consistent in the one bedroom price per square foot. So really not a significant drop off or increase or anything like that. But the three bedrooms, which is the purple line, we are showing since second quarter of 2010, we're showing a steep drop off on the price per square foot by almost $50 in a half a year. And the four bedrooms, you're starting to see a little bit more consistency, but because there's so few and far between of four-bedroom sales, any sale, whether it's low or high, is going to skew that number. So we don't really take that into too much consideration. But overall, we are starting to see some more consistency, especially in the studios and one bedroom. So that's exciting to see for Hoboken. So just an indication on price per square foot of where we're at today. A lot of people have been asking us to put up some stuff on the website about the recent condo sales in the bigger buildings and the amenity buildings. So we took, for the purpose of this slideshow, the Hudson T Building, Maxwell Place, and Sky Club, and we show quarter to quarter how many sales and what the average sales price was on these particular buildings. So as you can see, Maxwell Place has a higher prices. We did show some consistency from 2009 to 2010. We didn't see that much of a drop-off in the average. That mostly came from 2008 to 2009 was a bigger adjustment in these buildings. But just for a reference point, these are the averages, totals for 2010 and 2009. take a look at the rate of absorption. The rate of absorption is calculated by taking the number of available units for sale and dividing it by the sales volume in the previous month. So basically what it means in short is how long it would take the market to sell out of the current inventory levels based off the previous month of sales. So in January we showed 37 sales. As of February 1st, we had 341 available condos for sale, which puts us at about a 9-month absorption rate. Typically, what builders look at and buyers and sellers look at in the market is 6 months typically indicates the that line. Anything under 6 months of absorption indicates a seller's market. Anything over 6 months indicates a buyer's market. Builders will typically look at the rate of absorption. They prefer anywhere between 4 and 6 months. We're seeing, obviously, with the state of the economy these days, builders are being a little bit more aggressive, stepping up their numbers a little bit and trying to get things in the ground. So they're looking more at that 6-month rate of absorption for their preference as far as when they want to really dive into the market and speculate on building spec buildings. Okay, let's get to our conclusion here. We're going to wrap this up pretty quick. For Hoboken, as we stated in the previous page, the rate of absorption, where we'd like to see it is about 6 months. We'd like to get there sometime by summertime, and we need to achieve about 55 condo sales per month to get there at the current inventory level. So as long as we don't see a dramatic increase in inventory and we can pick up the sales from pent-up demand or international investors or whoever wants to buy out there, we need to see about 55 sales on average based on the current inventory levels. We need that's an increase of about 31% more than what January provided. But again, January was no surprise to anybody. It's the winter. It happens each and every year. I don't care where you're at in the United States. If it's cold out, sales volume is typically down in the colder months. The rental rates, as we mentioned, are increasing, driving prices up a little bit in certain areas. We are seeing a couple more green arrows pointing up on the MLS and prices adjusting towards those higher rental rates and capitalization rates and things of that nature. Again, seeing fewer landlord concessions. We're in a buyer's market right now, so if you are a seller or a buyer, there's actually lesser of a gap of that disconnection between buyers and sellers these days. So that's really exciting to see. But it is still a buyer's market, and buyers are looking to get a good deal today. So as long as sellers are pricing their condos aggressively, they are selling, and we're seeing condos sell within the first couple days of being on the market if they're priced to sell. As mentioned in an earlier slide, if you bought within the last 5 years, chances are you can't afford to price your condo aggressively. If you bought 10 years ago or so, you can afford to price it aggressively. And those are the sellers that we're working with today. The ones that have held onto their condos longer are in a better driver's seat position to negotiate.